All right, welcome to The Explainer. Today, we're diving into the absolutely wild ride of a company called Oklo. Seriously, it's one of the most volatile energy stocks out there, and its vision for the future of energy has sent its stock on a journey you just have to see to believe.
So get this, in 2025, the stock just went ballistic. We're talking a surge of 238%. It was all fueled by pure speculation and this huge promise of clean, next-gen nuclear power. Investors were basically betting the farm on a full-blown energy revolution.
But you know how it goes. What goes up must come down. And boy, did it come down. By early 2026, the stock had tanked, dropping over 50% from its high. It left a ton of investors with some serious whiplash, all asking the exact same question: what in the world is going on here?
Okay, so that's the big question, right? Why the nuclear roller coaster? Well, it all boils down to this massive tug of war between Oklo's incredibly ambitious, world-changing vision and its very, very challenging current reality. So let's break down both sides of that coin.
All right, let's start with the promise of Oklo, the part that's powering this whole AI revolution narrative, the hype case. To really get why people are so excited, you've got to understand the groundbreaking tech that's at the heart of it all.
So what Oklo does is specialize in these things called small nuclear reactors. Now, instead of picturing those giant, sprawling power plants from the old days, I want you to think smaller, way more flexible, and super efficient units. They're kind of seen as a key piece of the puzzle for our future energy needs, especially with, the whole world just demanding more and more power.
And this is where the bull case gets really juicy. I mean, this is the exciting part. Oklo's tech is basically promising to solve two gigantic problems at the same time. First, it can actually recycle existing nuclear waste and use it as fuel. How cool is that? And second, it provides that stable 24/7 low-carbon energy that the AI boom is absolutely starving for to power its data centers.
Okay, so that all sounds pretty amazing, right? A real game changer. But there's a billion-dollar problem. It's time for a little reality check, because when you look at the financials, a completely different and frankly much scarier picture of the company starts to emerge.
Yep, you're seeing that right. Zero. Zilch. Nada. Even though its market cap has shot up to as high as $16 billion, Oklo is currently making exactly $0 in revenue. Why? Well, because it hasn't sold anything yet. Its first reactors haven't even been built.
And it's not just that they aren't making money. They're spending it. And they're spending it fast. In just the last year, Oklo burned through more than $62 million. And that's just on day-to-day operations. For a company with absolutely no income, that is a massive financial hole to be. So, to just survive until their first reactor might come online, we're talking maybe 2027, the company needs to raise a staggering $1.5 billion. And how are they going to do that? Well, by selling more stock. And if you're an investor, that's not great news, because it means your piece of the pie gets smaller, and it puts even more downward pressure on that already volatile stock price. So just when the financial pressure was getting intense and the stock was in a nosedive, a huge plot twist. A tech giant enters the scene. A partnership that literally changed the entire narrative for Oklo, pretty much overnight.
And the news was an absolute bombshell. On January 9th, 2026, Oklo announced a major partnership with Meta Platforms. Yes, that Meta, the company behind Facebook and Instagram. The deal was for Oklo to help power their giant AI data centers. As you can imagine, the market went absolutely crazy, and the stock just took off like a rocket. Again.
But now, let's break down this partnership, because it's pretty one-sided, which is why we call it asymmetric. For Oklo, it's a lifeline, right? They get a massive, credible customer, some financial backing, and huge market validation. But for Meta, they get a future, stable energy supply for their AI ambitions with almost no risk. All the pressure, all the heavy lifting of actually building and running a nuclear reactor, that stays squarely on Oklo's shoulders.
And that brings us right back to the central problem for anyone looking at this company today. It is a super high-stakes bet. You're trying to balance this immense world-changing promise against some very real and very immediate peril. And look, it's not just us saying it. As the Motley Fool points out, if Oklo falls short of these massive expectations, the stock could be vulnerable to a huge sell-off. And you have to remember, with this sky-high valuation and years to go before they even see $1 of revenue, they have to be perfect. Any little hiccup, a delay in licensing, a financing problem, construction issues,
Any of it could be an absolute disaster for the stock.
So what's the big takeaway here? This whole story, it isn't really just about Oklo. It's a fantastic case study in the massive promise and the incredible peril of investing in the technologies that could change our world. And it leaves us with this huge question. Is Oklo the future of clean energy, or is it just a cautionary tale of market hype? It really makes you wonder, how much risk are you willing to take for a shot at powering the future?